Now with my guest, Helena Vinas Fiestas from BNP Paribas Investment Partners, we will discuss the evolution of sustainable investing. Many of our viewers and readers are developing an increasing social conscience due to the influence of leading thinkers, the media and environmental groups in society around them, which are fast changing our mentality. If people, your average citizens, are interested in socially responsible investing, how do they take the plunge? How do they actually make that investment? Do they buy a fund? Do they buy an index? Do they buy a structured product? How do they take that first step?
It is a very simple answer. It is the same way that today people are much more conscious about the impact of when they buy coffee, for instance, and how labor standards at the end of supply chain and the coffee value chain, are more than questionable, and that by buying fair trade coffee, they can actually ensure that those labor standards, reach a minimum level that are respected. The same way people can go to their banks, they can go to whoever is in charge of their pension and ask for a sustainable and responsible investment fund. They can buy funds which are, invest either on the best companies, on those companies that do not violate human rights, that actually respect environmental rights, or they can even, make a bigger impact by buying specific funds that they are that they have a purpose, whether social or environmental. So, for instance, you can buy a fund which is exclusively trying to finance the transition to a low-carbon economy, or you can invest in a fund like we have a fund called Human Development, which has a positive impact on human development.
And we alluded to this earlier, is there a strong probability that these ethically managed funds will perform better than the traditional investments?
I strongly believe that in the long term, they will always perform better. If you're a long-term investor, it is on your own vested interest to invest responsibly and sustainably because there's an economic imperative. It's been proven. Harvard Business School have done lots of studies around, and one really interesting, but they put two funds, they created two funds, one with those companies that perform best sustainably and one with those that perform the worst from the same sectors. And they've proven that over the time, the first one with the most sustainable companies within it perform much, much better